Today we're going to go over the top 3 Forex indicators for any beginner trader. But before we do that, I want to remind you that my last and final Forex course is dropping on June 30th at 12 p.m. PST. And as well with that, if you guys could like this video, that will help me get support on this video and get this message out to more traders that are in need of help. So I'm going to go over 3 indicators. The first one is the Stochastic Oscillator. The second one is the 20 moving average, and the third one is the sessions indicator. All these indicators are very beginner friendly and easy to set up, and this is going to help you understand how I trade and how I'm making multiple 6 figures every single year trading and how you can do the same thing. Let's get into my computer. Alright guys, the first indicator that we're going to go over is the Stochastic Oscillator. It is this indicator right here. And what we need to do first is type in S-T-O-C-H, and it's going to be the first one, stochastic. Okay? Now once we have that pulled up, this is what it's going to look like. Now really what this indicator does is it tells us when the market is overbought or it's oversold. So when we see it, the lines crossing over the 80% right here, that's signaling a good sell. When it's crossing under the 20%, that's signaling a good buy. So we can see right here that on this graph right here, look at how the cursor lines up perfectly to the actual candles up here. So as it's crossing under, we can see that we have a doji right here close, and then a bullish candle, and then right after that, the market shoots up. Now, really what made us see that it was going to be a good sell is we did have an M pattern right here. And also, if you guys are new to trading, whenever you see an A pattern or an M pattern, that's signaling a sell. When you see a V pattern or a W pattern, that's signaling a buy. So we can see that we have an M pattern right here. Goes up, shoots down, then goes up again and hits this level one more time and really pushes down. So we can see that right here at the Stochastic Oscillator, it was overbought right here. So that's signaling a very good sell. So what we're doing is we're overall combining how the candle and the market formations are forming also with the Stochastic Oscillator. Now when I'm using this indicator, what I like to look for is when it's overbought or oversold, I like to see a candle that is a reversal candle. A doji, a spinning top, a shooting star, any type of candle like that, and that's going to give me confirmation whether it's going to be a good buy or a good sell and add up in confluence with the Stochastic Oscillator. So let's go over another example for you guys. So we can see right here that the market was over the 80%, and we see a nice reversal candle right here, and then the market starts to drop down. Now also let me remind you that this indicator is compatible with any time frame. So it works on the minute 15, the hour 1, the hour 4, the daily time frame. So maybe you want to look at the hour 4 and you're anticipating a really big move happening. This is a great indicator to use. So we can see that right here it was overbought, and look at this drop right here. And then one more time it goes up right here and rejects the psychological level of 33,250. And it's overbought right here, and then it just tanks. And the same thing, vice versa. It was oversold right here, and then it starts to push up. This is how you use the Stochastic Oscillator. Now the next indicator that we're going to go over is the 20 moving average. This video is sponsored by my program FX University. Go to the link in the description to sign up, or there should be a link on this page. Once you go to join now, you're going to go to get started, and once you do, we're going to give you a code for 15% off. Go right here where it says to add promo code, type in FX1 and click apply. You're going to go to indicators and type in moving average, if I could spell, and it's going to be this one right here. Now once you actually get that indicator pulled up, it's going to look like this, and you're going to go to the settings, and the inputs for the length you're going to have 20, and you can make it any color that you want. So my 20 moving average is actually the yellow line. We can see the yellow line on the chart right here. So really what this indicator does is it's more of a trend-based indicator. So it's telling us whether we're in an uptrend or we're in a downtrend. So here's our moving average right here. We can see that the candles were below the moving average right here, And then all of a sudden, they flip to the top side of the moving average. So when we see the candles are below the 20 moving average, the yellow line, that's signaling good sells, that we're in a bearish market. And then when the candles flip to the upside and the candles are above the moving average, that's telling us that we're in a bull market. So a lot of the time when we're trading, the market will usually go and hit the 20 moving average, hit it, and then pull away like we can see right here. This long wick hit it and then pulled away. Also, it hit it one more time right here and then pulled away. So a lot of the time when I have confirmed what trend we're in, whether we're in an uptrend or a downtrend, I then will wait for the moving average to hit, or I will wait for the candles to hit the moving average. And when they do, I'll have an entry put right there. So I'll sell or buy the market when it hits it. Obviously, if we're in a downtrend, we're going to sell when it hits the moving average. And when we're in an uptrend, when it hits the moving average, we're going to buy. So we can see it hit the moving average right here and then pushed away very quickly. So that's how we're going to be using the 20 moving average. And there are different lengths for the moving average. I have a red line right here. That's my 10 moving average. So what you guys can do is kind of test the moving averages and see what moving average works best for you. Higher pace or faster paced markets are going to work for lower moving averages like the 10 moving average. And then slower paced markets like trending markets are going to work for a higher moving average. So I also like the 50 moving average, but my favorite moving average is the 20, baby. Okay? The last and final indicator is the sessions indicator. And I need you guys to get the right one. So we're going to go right here and type in session. And we're going to get this one that says sessions Asia, London, NY colored. This is the one we're going to get right here. Once you get that, you can go to the settings on it. And the cool thing about this indicator, I'm going to have to reload my chart real quick for you guys to see. Okay? The cool thing about this indicator is we can put this indicator up and it's going to tell us what session we are in or what session we want to see. So it's really a back outline of the candles, and you can see it's a blue box right here. This is the New York session. So you're obviously going to choose like what session are you trading, the Asia, the London, or the New York, or do you trade all of them? So with me, I only trade the New York and I have that blue shade. So you can add it to London, Asia, whatever you guys want. Now the cool thing about this indicator is it does help us identify what trend we are in. And this is very beneficial when we want to back test a certain session that's going on. So with me, I'll go back in time and I'll be like, all right, this big move happened. This is obviously the New York session, but I want to know the key time before this move actually happened so I'm able to predict it in the future. So overall, this indicator is great because it's helping you overall figure out what session was it in when these big moves happen. And this is going to help you back test and make it a lot easier. I hope you guys enjoyed this video. And remember, June 30th is the launch of my last and final Forex course. I'll see you guys on the next video. Peace.